Oh, yes, it is. I didn't add myself to the stage. Hey, guys. Welcome back to the Money Zone. I'm your host, Folasade, the accountability accountant, guys. I'm so excited to be back. I had to take a quick break because our camera wasn't working, and I didn't want to go into segment 2 without being able to know and see myself and all of that good stuff, okay? So, guys, if you've been seeing everywhere, you can deduct tax, you can deduct vacations, you can deduct company retreats, you can do all of this stuff. But guess what, guys? It is so many nuances behind all of this stuff that it burns my soul when I see people come online just frivolously putting out this type of information without you guys knowing all that it takes to be able to achieve those type of tax write-offs. Hey, so what I'm about to do, guys, I'm gonna share my screen, and I think on Instagram I have it. Give me 1 second, Instagram. I think I have it recorded, screen recorded specifically for you guys. So just give me 1 second, y'all. Technical. Let me see how we do this. I know I recorded this. When did I know I did screen record. Hold on, y'all. Did I do screen record? Screen record. I know I did. Because I want y'all to see the video, but y'all may have to just hear it then, okay? If I cannot find it, I'm going to scroll just a little bit more. I do not see it. I'm sorry, Instagram. So, okay, I'm sorry. Y'all just going to have to listen to it, okay?
You want to go to Miami, right? Instead of just going. That the tax code was made for entrepreneurs and business owners. It wasn't made for employees. Then you start to look at life completely different. Like even me and Troy, we went to Mexico a few months ago with our families. It's a company retreat. It's not a vacation because we in Mexico and we talking about strategy, we planning, we filming content. So what's the difference between a company retreat and a vacation? One is a write-off, one isn't. When you want to go to Miami, right, instead of just going to Miami, putting it on your credit card and spending a bunch of money, why don't you actually have a company? Why don't you actually have some employees, your friends? Why don't you go? Why don't you have a lunch? Why don't you meet somebody? Why don't you attend an event? Now that actually becomes a company retreat. Now that becomes tax deductible. This whole thing is a game. You just got to understand it. But once you understand it, you realize that all of these things are made for entrepreneurs and investors. It's not made for employees. As long as you have that employee mindset, you're never going to be able to reach the real value of wealth in this country, because you have to understand these laws were written by somebody. So they were written by people that want to take advantage of it. But of course, the minority is never going to look out for the majority. So the top people are going to make the laws for themselves and they're educated. But the vast majority of people weren't educated, but now you are educated. So now that you have the information, there's no excuse not to utilize the information. Once you realize that the tax code was made for entrepreneurs and business owners, it wasn't made for employees.
All right, let's go ahead on and let's do this in spurts, okay? So he said, first of all, let's realize that the tax code was made for business owners and not employees. And he's correct. The tax code does not benefit employees the same way it benefits business owners. Here's why. The tax system basically, on a short form, don't trust employees, okay? So they have your employer withhold taxes and act as the trustee for them, collect the taxes from you, and then they will remit the taxes to the IRS off your total income, whatever you make. So if your hourly rate is $10 an hour and you work 10 hours, that's $100. You're going to pay taxes on that $100. But as a business owner, they give us the flexibility to pay taxes on what's left over after our expenses. So if we made $100 and then we paid a contractor $50 and then we paid Facebook ads for $25, then that means we will only pay taxes on the remaining $25. So either we can now set up estimated tax payments and pay them on a quarterly basis as the individual business owner, or when the business go and file the tax return, don't wait until the last year at the end of the year, but pay the taxes then. Or if you are an S corp or something like that, you may be paying taxes on payroll on a monthly basis. So yes, the tax code does benefit businesses more than it does individuals, and it's basically saying that they don't it seems like, if you look at it how it's perceived, business owners are more trustworthy, okay, to pay their taxes on a different cycle, not on every dollar that they make, not immediately. We get to pay it after the fact. Okay, so they are correct with that. Okay, let me make sure.
Then you start to look at life completely different. Like even me and Troy, we went to Mexico a few months ago with our families. It's a company retreat.
Okay, so here we go. He said you have to start looking at things differently. Him and Troy went to Mexico and then invited their family. Yes, I do taxes too. Invited their family, and it became a business write-off. Okay, so where should I even begin, y'all? Should I begin with breaking is it true? Okay, so because him and Troy are business partners, immediately, if him and Troy were to be able to substantiate that business trip was for business purposes, okay, then definitely the business can write it off on their taxes. But it is just not that easy. From the way that they saying, it sounds like all you gotta do is tell the IRS, oh no, that's a business. We went to Mexico. That's a business vacation. And just sit there. That's a business vacation. And then sit there again. No, that is not going to fly. Just because you paid for that vacation from your business debit card or your business credit card does not make it a business deduction. It does not make it a tax write-off. Let me clarify this. Just because you guys pay for something on your business credit card or on your business debit card does not make it a tax write-off. Okay? It does not. All it shows is that you purchased something from your business card. That's it. You have to now have the paperwork, the documentation, and also have the ability to prove that, okay, this is why we travel. So let's go ahead and start looking at some IRS code so we can be all on the same page. I think the first code that we're going to dive into, give me 1 second, guys. The first code, okay. Which one? I should have worn my glass, and my eye been hurting a little bit too. You guys as well. 1 second. Where's all my notes? Okay. Hold on, y'all, because I have so many notes. It's ridiculous. Okay, here we go. So let's go to IRS section 274 of the Internal Revenue Code. Give me 1 second. And I already have my notes already, but I just had to go through my notes. So the IRS code section 274 is the disallowance of certain entertainment expenses, certain travel expenses, and things like that. Okay. So here's the issue that we're having, and let me share this screen so you guys can be on the same page. Hold on. Share this. Okay. Alrighty. So section 274 of the IRS code say disallowance of certain entertainment expenses. So here's the thing, guys. Why I pulled up this code is because the moment that you have a company retreat, it is somewhat in the arena of entertainment expenditures. And according to the Tax Cuts and Jobs Act that Donald Trump implemented in 2017, it completely wiped out the entertainment expense in totality, unless it is 100% for the employee. employees, and there's still several nuances that goes along with that. A company retreat falls within that, because a lot of company retreats involve what? Travel. You may have an entertainer. There may be other certain things. Okay. So under section 274, it says there is entertainment, amusement, recreation, or qualified transportation fringes. In general, no deduction otherwise allowable under this chapter shall be allowed for any item with respect to an activity which is of a type generally considered to constitute entertainment, amusement, or recreation, or with respect to a facility used in connection with an activity referred to in subparagraph. Now, this section 274 breaks down gifts, but we're not talking about gifts, right? Domestic travel, and every type of deduction that we can actually possibly deduct. Okay, you see it? Business meetings, you see that? Meetings of the business leagues, you see it? Recreational expenses for employees. And it's long, but let me go to my notes really quick, guys, so I can simplify this, okay? Give me 1 second. I wasn't even sharing? Oh my gosh, I wasn't even sharing, you guys. I don't know. Okay, there we go. Let me these, and then I'll pull up my notes. Oh my gosh, my team is going to be like, Miss Fola, where is the document? Okay, so section 274 of the Internal Revenue Code places specific limitations and requirements on the deductibility of certain business expenses. In general, those expenses are entertainment, meals and travel, okay, and gifts, okay? Because Trump did that Tax Cuts and Jobs Act, the entertainment allowance is challenging to beat. So you have to be extremely strategic. So first things first, guys, before there is a deduction, you guys have to know that an expense can, for it to be a tax write-off, and let me find that section, an expense have to be ordinary and necessary and not extravagant. I'm gonna say that again. For an expense to qualify as a tax write-off. So let me say this, because see, a lot of y'all be listening to these non-accountants and you don't realize this. Just because the company have an expense does not mean it's a tax write-off. Let me say that again. Just because your company have an expense does not mean it's a tax write-off. So for example, you can pay for anything from your business bank account. That does not mean that you can take a write-off for it. So let's just use one simple write-off that you guys are familiar with is the meals deduction, right? During COVID, they allow businesses to write off 100% of their meals if they use them in specific restaurants and meet certain criteria, requirements, right? But now it's back to its regular rules. So if you were to pay for a meal, you will only get 50% of that. So if the meal was $100 on your business financial statements, it'll show the $100 spent. But on your tax return, you're only going to be able to write off $50. Does that make sense to you guys? Just because you have a business expense does not mean it's a tax write-off. Are we all on the same page? Can you put 1 in the chat for me if you fully understand that just because you buy something on a business debit card, buy something on a business credit card, it's not a business, it doesn't guarantee that it's a tax write-off. Put 1 in the chat if you know that now. Okay, so because now we know that, okay, we know that. So now the IRS said, give me 1 second. Give me 1 second. Let's go ahead on and pull this up from the IRS. Why? Make it easy for me. Okay. I didn't think I was going to talk about this one, but we're going to pull it up. Okay. Now I'm going to share my screen. This is the IRS site. Basically, and I'm going to read it to you guys on Instagram since I'm unable to take you guys along with me. It says, we're on the IRS site. You guys see it. It says ordinary and necessary. Remember I said for a business expense to qualify as a tax write-off, it needs to be what? Ordinary and necessary, right? And then not extravagant, remember? Okay. So it says to be deductible, they're talking about your expenses. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common. Now, let's think about this. Is a company retreat common? Yeah. Most companies that's making, decent revenue may have some type of company retreat, right? Right? Okay. But is it necessary? So let's read the next part. It says an ordinary expense is one that is common and accepted in your industry. A necessary expense is one that is helpful and appropriate for your trade or business. So now, how do we prove to the IRS that your company retreat, your company vacation, your company business meeting, your company this, your company that was ordinary and necessary? Necessary says it must be helpful and appropriate for your trade or business. So how would you now convince an IRS agent that your company retreat was helpful and appropriate? That's what a challenge a lot of you guys are going to face, is that a lot of these expenses that these gurus are telling you guys, they don't apply to you yet. You making $10,000 a year and taking a company retreat is not necessary or ordinary for your business at that phase. So yes, a company retreat for them, they're making millions. That works, right? They can afford it. But a new startup company that didn't make any money, that only made 10 grand, 20 grand, 30 grand, 40 grand, 50 grand, which is their target, is a $10,000 company retreat ordinary and necessary? What do y'all think? Let me know. Do y'all think it's ordinary and necessary? Put yes in the chat. If you don't, put no. Is it? Because a lot of you guys are investing in stuff that's not ordinary and necessary. So let's go back and see, we'll read back what ordinary means. Ordinary means an expense that is common and accepted. Thank you. Camille said no, it's not. Treva said no, it's not, y'all. They are right. It's not. So all of you that have invested into these programs and courses, and these people told you you can write off this, was that expense ordinary and necessary for your business? Was it helpful and appropriate? How is a $5,000 expense to Mexico necessary, helpful? Couldn't you find palm trees to do content? See, this is what the IRS agent going to tell them. Couldn't you go and find palm trees in your your state? Couldn't you go to the nearest beach and shoot that same content? So let's go back to the video, because we first dissected into what he said. Oh, just make it a company retreat. It doesn't fly like that. Yes, remember guys, you can spend any money from your business bank account and try to say it's a business expense. And see, that's what a lot of people don't tell you guys. There are so many sectors of the accounting industry. You have financial accounting, which is your bookkeeping. Okay. Then you have tax accounting, which is the IRS. For financial statement purposes, there are certain rules that we have to oblige by, okay? Which is GAAP, generally accepted accounting principles, okay? So this is how Donald Trump got in trouble. He breached GAAP, generally generally accepted accounting principles by trying to write off the hush money for Stormy Daniels, which is now falsifying financial records. So for financial statement purposes, you can try to deduct everything as long as it's according to GAAP. But for tax purposes, that doesn't mean everything that's on your financial statements will be on your tax return. Let me give you another example. When you guys pay penalties and fines and fees, you cannot write off on your taxes penalties and fines and late fees and insufficient funds fees. You cannot write those off on your taxes. So write that down. I cannot write off insufficient funds fees, late fees, and penalty fees on your taxes. But you can have that on your financial statements. And see, this is what I think a lot of people were probably playing on y'all top when they were telling you guys is a tax write-off, when a lot of this stuff is just going to be on the financial statements and may never hit the taxes. So let's go back to their video. So guys, if you're enjoying the content, please let me know so I can maybe keep doing this type. I know I've done these type of like reaction type of things, but I've never like did a deep dive like this. So if you're enjoying the deep dive, please let me know so I can keep at it. All right, so we're about to go back and play the rest of the video.
It's not a vacation because we in Mexico and we talk about strategy, we planning, we filming.
That does not fly. Just because you and your business partner fly to Mexico and talk about business does not make it a legitimate tax write-off. There has to be a bigger purpose. Because it's your business partner and y'all in the same state, the IRS is going to say, well, you couldn't have that same business meeting at the pub down the street. You guys had to fly to Mexico to be able to have that business meeting. That's what they're going to tell you. And what you going to say? What you going to say? And so that's the type of things that I'm going to teach you guys in my course. What to say, what to show them, what you guys are supposed to do before, what we were supposed to be doing during, what we're supposed to be doing after. That's what I'm going to be teaching you guys in my upcoming course, tax write-offs for content creators, influencers, and business owners. So first things first, guys, just because you're having a business meeting in another state does not constitute it being a tax write-off. You have to be able to substantiate the purpose, and you have to be able to show, okay, well, we went to Mexico to meet with XYZ because he wants to give us funding for our upcoming program in the school system. Now, that will fly. Yep, I'm going to go into that, Camille. I'm going to go into that. So Camille said, also, if their family members are not employees, then the money spent on food, etc., doesn't fly either. Yes and no. There is a wraparound, but we're going to talk about it. Yes and no. That's why I say, guys, it's a lot of nuances behind this mess. So let's go back to that video, and we're going to, because they say that in the video, so I'm going to get to that.
Content. So what's the difference between a company retreat and a vacation? One is a write-off, one isn't. When you want to go to Miami, right, instead of just going to Miami, putting it on your credit card and spending a bunch of money, why don't you actually have a company? Why don't you actually have some employees, your friends?
Just because you have a company, just because you go to Miami, and just because you're spending money on Miami does not constitute it being a tax write-off. What is the reason why you're in Miami? What is the business purpose? What does the business benefit from you being in Miami? Are you flying out to see colleagues? Okay, well, prove it. This is what the IRS is going to say. Okay, prove it. Okay, so what did you and the colleagues do? Where's your itinerary? There's a lot of nuances. Don't just put this stuff on a credit card and think you're going to just fly out and that's it. It seemed like it's that easy the way they say it, but guys, it's a lot of paperwork behind the scenes. that goes. There's a lot of documentation that goes behind the scenes. And then early on in the video, he said something about them traveling with their families. And so Camille asked me a question. She said, also, if their family members are not employees, then the money spent on the food, etc., doesn't fly either. Correct. So 2 layers to this. If their children and their spouses are not employees, legitimate, because just because, see, this is where it gets scary, is that if you guys are not doing everything correctly and you end up getting audited, before the IRS take that expense, they're going to first figure out if your child or your spouse was a bona fide employee. So they're going to do the employee test, okay, to see whether or not they are really employees. So they're going to ask you for a lot of paperwork to back up whether or not your child or your spouse is your employee. So that's the first thing the IRS is going to do. So once the IRS is able to show, or once you are able to show the IRS that your spouse or your employee, your spouse or your child is your legitimate employee, then yes, their expenses to Mexico for that company retreat can be a tax write-off. However, is that company retreat available for everybody? If that company retreat is not available for everybody, then no, you cannot write off everything. And what I mean by available to everybody, meaning all 50 of your employees have the opportunity to come to that retreat and you pay for all of the expenditures. If that's the case, then yes, everybody can be written off. But if it's not available, if that trip to Mexico is not available to all staff, it's not a 100% write-off at all. If it's all top level management, it's not a 100% write-off. Now, if your spouse is not an employee of your company, then automatically, no, their expenses that you pay for them will not be able to be a tax write-off. However, if you can show that there was a business purpose and be able to show that your wife, your husband, your child did all of it, and you probably would have had to pay somebody else a large amount of money to do what they did, then yes, you can write off the cost for their Mexico trip for the so-called company retreat. There's a lot of nuances. And then guess what? Even if you take the tax write-off, that's the first layer of it. It's still a lot of layers to it. Okay? So let me go back. So Camille, did that answer your question?
Why don't you go? Why don't you have a lunch? Why don't you meet somebody? Why don't you attend an event? Now that actually becomes...
First of all, see, this is what a lot of people are not telling you guys, and I'm not going to give you guys too much, because this, I go deeper in my course, and I don't think it's fair for my clients and the people that invest into the course for me to give you guys all of this information publicly like this. So let me just play it again, because y'all know my little ditzy butt beat, my whole little ditzy butt beat, losing my train of thought sometimes. So let me play it one more time. Hold on.
Becomes a company retreat. Now that becomes tax deductible. This whole thing is a game. You just got to understand it. But once you understand it, you realize that all of these things are made for entrepreneurs.
Oh, okay, yeah, that's what he was saying. He was saying, if you have a meeting, if you do content, if you do this. So first of all, if you're having a meeting with someone else, then how does that make it a company retreat? See, this is where y'all want to mess yourselves up at. If you guys have company retreats, normally it's the company retreat. That's it. Now the CEO might stay an extra 2 days because they have another meeting, or he might fit, a meeting, through a colleague while the rest of the staff is doing team building things, team building activities and stuff. That's different, right? But you're telling me you're going to Mexico to have a meeting, but you just told me you was in Mexico for a company retreat. The IRS is going to say, well, that meeting, you couldn't have had that because Joe, the person that you had the meeting with, his office was right down the street from yours. So you couldn't have the meeting with Joe down the street. So you had to have to go to Mexico to have the meeting with Joe. They're going to throw it out. So you had to go to Mexico to meet with Joe. And Joe's office is down the street. They're going to throw it out. How are you guys going to substantiate all of these tax write-offs that these gurus are telling you when you don't make the money, you don't have the systems, you don't have the processes, and you don't have the policies in place? Guys, when I first started teaching tax write-offs, I stopped it because what I realized was that you guys were executing on half-ass tax strategies. So let me give you context. So I will teach you guys how to write off your home. But guess what? You guys wouldn't track your expenses. Or you wouldn't know what your square footage is for your home. So I stopped giving you guys tax strategies because number one, you guys don't even have the policies. So to pull off a company retreat, where's your company policies? Where's your documentation? Who is the retreat coordinator? Hint, hint. What is the agenda of the retreat? Who is allowed to go to the retreat? All determines how much you can write off. Then additionally, guess what? Your meals and stuff actually needs to be tracked separately. So you have y'all travel expenses and y'all accommodations, and then you have your meals expenses. That needs to be tracked separately. And everything needs to be substantiated. Substantiation means you need to have the date, the time, the purpose, and all the extra things. But from this video, it just seems like, oh, let's go. And we get on a plane and then we go. But that's not how it goes, guys. So you guys want to come in? Anderson Taxes, you want to come in? And Camille, are you guys sending a request by accident or on purpose? Okay, so let's go back to the video, guys.
Entrepreneurs and investors, it's not made for employees. As long as you have that employee mindset, you're never going to be able to reach the real value of wealth in this country, because you have to understand these laws were written by somebody. So they were written by people that want to take advantage of it. But of course, the minority is never going to look out for the majority. So the top people are going to make the laws for themselves and they're educated. But the vast majority of people weren't educated, but now you are educated. So now that you have the information, there's no excuse not to utilize the information. Once you realize that the tax code was made.
Okay. All right. So let me just add one more layer on here. So now let's say, for example, you took your wife, you took your spouse, and you are an employee of the company, right? Now, your employer could include what they paid for your wife to go on a trip in your income on your W-2. So that's another way, and y'all may want to write this down, another way for the company to be able to write it off. But then again, we still have to show, okay, why are we paying him extra? Okay, and then the employee will have to pay. But that's really like the CEO, yeah, they can get away with that too. So let's say, for example, you are a partner and your spouse want to come on a truck, you're a shareholder in your S Corp, right? And your spouse want to come. So your company can include in your W-2 the amount of your spouse's travel. It's called working spouse fringe benefits. Working conditions, fringe benefits. Yeah, I think it's like section 132. Hold on, let me look at my notes. Yeah, section 132 of the IRS code. It says Internal Revenue Code, section 132 deals with the exclusion from gross income. So if we cannot prove that what your spouse is doing on that business trip or at that company retreat, and it's not business related, then we will have to include what we spent for your spouse into your W-2. Okay. According to section 132. Okay. And I think I'm almost done, guys, with this video.
Made for entrepreneurs and business owners. It wasn't made for employees. Then you start to look at life completely different. Like even me and Troy, we went to Mexico a few months ago with our families. It's a company retreat. It's not a vacation. Because we in Mexico and we talk about strategy, we planning, we filming content. So what's the difference between a company retreat and a vacation? One is a write-off, one isn't. When you want to go to Miami, right, instead of just going to Miami, putting it on your credit card and spending a bunch of money, why don't you actually have a company? Why don't you actually have some employees, your friends?
Okay. So he said, why don't you have a company? Why don't you have employees that are your friends? So first things first, guys, for you to have employees that are your friend, that means you need to be paying them on W-2. So that means you are incurring additional expenses. Just saying that sounds great, but the reality is, do you really want to have your partner on W-2 as an employee of your company if he really don't work for you just to be able to write off business meals? No. Unless that partner is that friend actually do something for your company, then great. Yes, you can write it off. But if he don't, then so we're hiring them, putting them on payroll to do what? And then also, guys, you got to have the money to play this game. So if we're going to be paying people and doing company retreats, first of all, you got to have enough money for the company retreat. You got to have enough money for the accommodations. You got to have enough money for the planning. Okay. Then you have to have enough money to cover everybody in your team. Okay. Then you have to have enough money to, like he said, have your friend on payroll, be an employee of your company. So you got to pay your friend. Then you got to pay the payroll company. Okay. Then you got to pay for the meal. Remember, a tax write-off, because a lot of you don't realize this, a tax write-off comes from either revenue that the company make or out of your pocket from you investing in the company or from a credit card or loan that was acquired by you for the company or directly for the company. The money tax write-off just doesn't fly out of the sky. It is actually from money that you generated or money that you have. It's not a free deduction like people tell y'all. Tax write-offs are not a free deduction. This is why you guys need your own accountant, because sometimes paying $5,000. So let me give you an example. Let's just use the basic charitable donation. Giving $5,000 to a charity, right, does not guarantee that you will qualify for itemized deductions. So if you didn't have your own accountant, you probably assumed that whole $5,000 charitable donation is going to just be, yes, I got an extra deduction, $5,000. No. First of all, it needs to be compiled with your other itemized deductions. And then you really want to take whichever one is higher between standard deduction and itemized. And from my experience, for the past couple of years since Trump implemented this Tax Cuts and Jobs Act, the standard deduction has been the way to go because it's been higher than almost everybody itemized deductions, and less for the rich people because they give hundreds and hundreds and hundreds and hundred thousands to charity. So that $5,000 deduction that you thought you had probably isn't a write-off. Like when I have to tell some clients that they're not even getting a write-off for their mortgage entrance, they freak out. Well, that was the reason why I bought the house. Nobody didn't tell me that. They told me that I was able to get a write-off for it. That's what the mortgage company's telling y'all. So y'all are being duped across the board, and they're leaving us accountants here to break the bad news to you guys. Exactly, Anderson. We're left to break the bad news to you guys. They didn't got y'all in that house, convince you that you get a tax write-off because you didn't have your own accountant. You didn't understand that standard deduction, itemized deductions, and then guess what? He done already made his commission and long gone to his next deal. And you're stuck now thinking you have a tax write-off. And that is common. A lot of you are investing into different coaching programs and things like that. Remember, it needs to be ordinary and necessary. How is that coaching program? And see, this is where a lot of y'all buying wealth building programs from coaches and you're writing it off on your Etsy business. So now if you get audited, the IRS is going to say, oh, well, tell me what that coaching program you purchased was for. Oh, yeah, I purchased this coaching program to help me build my personal credit. The IRS is going to say, well, show me how that's ordinary and necessary, and how is it ordinary and necessary for your business to pay for you to build your personal credit? And is it common for businesses to write off paying for personal credit? That might not fly. Now, paying for business credit, yeah, that will fly. Business credit building, yes, that will fly. How are you going to be able to tell the IRS that you bought into this coaching program to teach you how to make income in 5 different industries, but you're in the hair business and you want to write that off? You can't write that off. So in addition to the retreats and the vacations, you guys are also taking write-offs for coaching programs and things that you're really not supposed to. Okay, so guys, that's all I have for you guys tonight. I have to put my babies down and get ready for tomorrow. So I enjoyed, like I said, I was a little bit kind of uncomfortable at first, right? Coming on because I haven't seen you guys in almost 2 months. But I'm excited to be back. And I'm excited to really teach you guys. A lot of you are new to me and you have never experienced how I teach classes. But if you guys were to take some time, you will see that everybody that's teaching you guys how to hire your child, they took my class. They took my content. Okay. After I do this class, watch. You're going to see so many people start promoting this stuff. Watch. Once I teach this class, because I go ham and I really teach you guys everything. I'm talking about because I've done audits. I've won hundreds of audits. Okay. I've experienced every type of agent, every type of manager, had to go to appeals several times. So I know what it takes to be able to write off real tax deductions. I know real tax strategies. Like prime example, I've been telling you guys for the past 2 years, all of y'all with S Corps, you're going to need accountable plans. And now I finally heard one accountant online talking about accountable plans. The average accountant don't know about accountable plans. But after good old Folasade with her little 20,000 followers teach you guys that, then everybody else want to talk about accountable plans now. So you guys will probably hear that more often. I did it. Okay. So I'm excited, guys. I'm back. Look out for my course. And I do have to extend the early bird pricing because guess what? In business, we all make mistakes. And when me and my team launched the course, nothing was done. My landing page wasn't done. My payment page wasn't done. And I've never had that issue, guys, because I have systems and processes and I've been creating courses for years. So when I found out that my team made that mistake, I was pissed. But guess what? It's nothing that I can do. So I did extend the $97 early bird pricing. I don't even know when I'm going to take off the early bird pricing because I did 2 to 3 weeks of marketing without you guys being able to pay. Okay. So if you guys wanted to invest in tax write-offs for content creators, influencers, and business owners, head over there while it's still $97. I will go up probably mid-June. But I'm going to give you guys some time because I dropped the ball on my end. I really did. Hey, Dwayne, how are you? I really did drop the ball. Okay. So guys, do you have any questions before oh no, this is the Money Zone. I'm thinking it's a regular live stream. Okay. Let me go, y'all. Look, I was thinking it's a regular little show. I was about to say do Q&A. But no, I'll do another live stream maybe tomorrow. But or Thursday, I'll do another live stream, and then you guys can come in and ask me any questions at all. If you guys are interested in really learning about tax write-offs, okay, well, post your question real quick. Go ahead and post your question real quick. I'll give you guys like 2 minutes or so. Post your question, Dwayne. So if you guys are interested in investing into my course, head over to my link tree in my Instagram bio. And I think it's the first link there. Okay. And so you guys won't be disappointed. You guys will get worksheets, workbooks, logs. You're going to get all my strategies, everything. All I ask y'all to do is don't try to resell my shit. Like if you do try to say Folasade taught me, at least. Like anytime I learn anything from anybody, y'all, I don't take their stuff. I say my coach taught me. I say that. Like y'all don't do that. Don't be stealing my stuff, y'all. Post your question before I go. You said pick up. Are you calling me? I don't understand. Okay. I don't understand. Okay. So all right, guys. So I'm about to get ready to head out. It's 9:30. Oh, yes, Camille, monthly. Camille, you guys, my actual bookkeeping clients get on the calendar with me every month. So every first of the month, all of the bookkeeping clients get access to me first. Before I can pop up online, before I can meet with any tax clients, anything, they get to schedule their appointment with me first. During that meeting, they have the ability to ask me any and everything. Every course that I create, they get. Every log I create, every worksheet I create, they have. So everything that I do on the front end and whatever I learn in business and build out, my bookkeeping clients get access to that. So they get access to everything. So they get to pick my brain on a monthly basis, and then they get access to all my worksheets, workbooks, logs, courses, everything. Okay. Okay, guys. So I love you guys so much. I hope that you guys learned quite a bit. And you now know that for a business expense to be a tax write-off, it needs to be ordinary and necessary. And then additionally, you guys saw a few tax codes. I'm just getting in the midst of doing it. So I just have to figure out a better process, like how I'm going to align my notes and my links and things like that. Guys, this stuff is kind of technical and systematic. So I have to kind of process how I'm going to do it. But I will continue dissecting situations like this or videos like this to better serve you guys, because I don't want you guys to just think that today I'm going to Mexico and it's a business write-off, because in that case, it wouldn't be unless there's nuances to it. Okay. So guys, I love you guys so much. I will see you on the other side. Have a good night. Bye, y'all.